Hey, what's up YouTube? You know, it's your boy Mr. Stocks on the Go, and we are back with a brand new video, guys. This is the Alibaba Q3 2024 earnings conference call, and you know your boy had to get up early and get this recorded for you guys. All right, so if you appreciate videos like this, guys, please remember to smash the like button. Let's get this video to at least 30 likes. If you're an Alibaba shareholder, go ahead, comment a Baba with a flame in the comment section so I know that you're here. All right, guys, and please remember to also check out the links in the description and the comment section for Wealthsimple trade, whereas you sign up, deposit just $1 and you will get a $25 cash bonus, and it also helps out with the channel. So without further ado, guys, let's jump straight into the conference call. You guys can also comment in the comment section. Let me know what you guys think about this conference call. Alibaba said they're going to do a lot of share buybacks, which is amazing, guys. So there's a whole lot of stuff in this video to unveil. So let's jump straight in.
With great service, meeting the different needs of different consumer segments, TTG will earn users' trust and return to growth. Thus, 2024 will be a year of comprehensive capability upgrades for TTG and also a year of significant investment, and we'll be prioritizing investment in the following areas. 1, product supply. We'll increase our investments in growing the selection of branded products and direct-from-manufacturer products on TTG's platforms. This will further strengthen our product supply advantages to better address new consumption trends and demands. 2, competitive pricing and efficiency. We'll increase investment into product sourcing capabilities and optimizing business model relationships between merchants and our platform. For different types of suppliers, we'll offer flexible business models that are best suited to improve their operational efficiency and thereby enhance Taobao's value proposition. The competitive pricing we're focused on delivering is attractive prices for quality products. This is a demand that consumers have across cycles and is fundamental to doing business. 3, quality service. We will work with our merchants and logistics partners to invest in improving the entire consumer service experience, including pre-sale, in-sale, post-sale, and logistics. For different customer segments on the platform, we will build a consumer service system that accurately identifies and meets the various needs of the different groups. 4, increase purchase frequency. Through the above investments, we will enhance our comprehensive capabilities to offer quality products at attractive prices with great service. We believe that improving the platform's overall shopping experience and service quality will lead to increased purchase frequency and materially improve the efficiency of user growth. Today, Taobao and Tmall remain the most valuable shopping platforms and the main place for merchants to do business. With the comprehensive capability building plan for 2024, we're confident that TTG will return to growth. Next, I'll hand over to Jiang Fan to present on AIDC. Good evening, everybody. Over the past quarter, despite the uncertain international environment and more intense market competition, AIDC achieved rapid growth. Total orders grew by 24% year-on-year, driven by strong growth across all major retail platforms. Growth in our cross-border business was especially significant. Our 3 major growth drivers are, first, enhanced consumer experience as a result of our business model and supply chain services upgrade. Second, product and technology innovation. And third, our targeted expansion in priority markets. Next, I will present our business results and future development plans around these 3 drivers. First is our business model and supply chain services upgrade. Last quarter, AliExpress achieved year-on-year order growth of over 60%. This was mainly driven by the new AE Choice model that we launched in early 2023. The AE Choice model is, in essence, an upgrade that we made to our original pure platform model into a hybrid business model that combines POP on the one hand with a fully entrusted model on the other, and it's underpinned by supply chain efficiency. It optimizes supply on the platform by balancing experience with richness of offerings. By offering entrusted cross-border logistics, marketing, and other services, we lower the barrier for merchants to engage in cross-border business, bringing more certainty to their operations and more diverse assortment to the platform. At the same time, we continue to enhance the end-to-end consumer experience, including by providing more stable product quality and more competitive prices, by continuing to optimize delivery time, and by adding value-added services like local product return. As of January 2024, Choice already made up half of all AliExpress orders. Its high-quality user experience has driven significant user growth and transaction growth on the AliExpress platform, and going forward, we'll continue to invest resolutely to further increase Choice penetration and provide a better experience to more users. In terms of product and technology innovation, AIDC serves consumers in different countries and regions around the world. We've already optimized products in certain key countries and regions in line with local preferences. These efforts have been highly appreciated, and we'll continue to pursue that kind of innovation and upgrading. We're also actively deploying AI to enhance operating efficiency and lower barriers for merchants. Our suite of AI-based digital foreign trade products have been officially launched, enabling real-time language translation, AI logistics services, rapid generation of images and videos for marketing, etc. Third, sustained growth in key markets. In the last quarter, we achieved good growth in different regional markets, and in certain key markets, AE achieved breakthrough rapid growth to become the leading platform locally. In Turkey and neighboring markets, Trendyol continued to achieve robust double-digit order growth and maintained its leading position in the Turkish market. It also further expanded its business in valuable new markets in the Middle East. In Europe, Alibaba.com completed its acquisition of the well-known European B2B digital trade platform Visible, further expanding its supplier base in the region and further advancing Alibaba.com's global expansion and dual brand strategy. There is huge potential for AIDC to increase user penetration in the majority of overseas markets. Building on our current resources and footprint, we will increase our investment in select regional markets where we see opportunities and value to achieve opportunities for high certainty and healthy growth. Going forward, we'll continue to maintain our rapid growth momentum and provide consumers with improved differentiated services. To that end, we'll continue to increase our investments in enhancing user experience and business competitiveness while expanding our business scale. Thank you.
Thank you, Jiangfan. We achieved a healthy financial performance in the past quarter, driven by steady business momentum and improving operating efficiency in several major businesses. Total consolidated revenue was RMB 260.3 billion, an increase of 5%. Consolidated adjusted EBITDA increased by 2% to RMB 52.8 billion. Our non-GAAP net income was RMB 48 billion, a decrease of 4%. Our GAAP net income was RMB 10.7 billion, a decrease of 35 billion. That was primarily attributable to change in investment values and impairments. Firstly, there was a market-to-market change from our equity investments of about RMB 19 billion. Second, amortization impairment of intangible assets was RMB 14.6 billion, of which RMB 12.1 billion was related to Sun Art impairment. Third, impairment of goodwill was RMB 8.5 billion related to Youku. The above three items were excluded from non-GAAP net income. As of December 31st, 2023, we continue to maintain a strong net cash position of RMB 487 billion, or $68.6 billion. Free cash flow this quarter was RMB 56.5 billion, a decrease of 31%. The decrease in free cash flow was attributed to increased capex and several one-time factors, including timing of income tax payments and working capital changes related to several of our businesses. Now let's look at the segment results, starting with Taobao and Tmall Group. Revenue for Taobao and Tmall Group was RMB 129.1 billion, an increase of 2%. During this quarter, we made steady progress to execute our Taobao and Tmall strategies. We observed a few positive trends. As Eddie mentioned, our online GMV achieved healthy growth, with order volume growing strongly during the quarter. Notably, the order volume exhibited double digits year-over-year growth during the second half of the quarter. Importantly, we continued our efforts to onboard a wide range of brands and merchants. The number of operating merchants on our platform continued to grow at double digits, and this trend has sustained over the past 4 quarters. Additionally, we are also seeing strong growth in paying merchants. Customer management revenue was RMB 92.1 billion, relatively flat year-over-year. The overall take rate decreased slightly year-over-year, mainly because of the increase in GMV came from Taobao merchants. The mix shift of GMV towards Taobao merchants provide us with further monetization potential because the take rate from Taobao merchants has been improving while Tmall merchants' take rate was unchanged during the quarter. Importantly, this trend also reflects increasing consumers' demand of price-competitive products offered on our platform. Direct sales and others revenue increased 2% to RMB 31.6 billion. China Commerce Wholesale Business revenue increased 23% to RMB 5.3 billion, primarily due to an increase in revenue from value-added services of 160AA.com. Taobao and Tmall Group adjusted EBITDA increased by 1% to RMB 59.9 billion. The increase was primarily due to the narrowing losses in certain businesses, partly offset by the increase in investment in content, user acquisition, and retention of Taobao app, as well as technological innovation. We are in the process of revitalizing Taobao and Tmall Group and positioning it for future growth. We are beginning to see early signs of GMV growth recovery, driven in part by investment made since earlier this fiscal year. We still have a lot of work ahead. As Eddie mentioned, we will invest for future growth and strengthen Taobao and Tmall Group's market leadership. Our Cloud Intelligence Group revenue quality continues to improve as we proactively reduce revenue from low-margin project-based contracts. Additionally, we recorded healthy growth of our public cloud revenue from external customers. Revenue from Cloud Intelligence Group was RMB 28.1 billion in this quarter, an increase of 3%. Cloud's adjusted EBITDA increased by 86% to RMB 2.4 billion. The continuous improvement in our adjusted EBITDA reflected improving product mix through our focus on public cloud and operating efficiency. The enhanced profitability of cloud business gives us confidence to invest in technology and customers to strengthen our public cloud leadership in the future. Alibaba International Digital Commerce Group revenue was RMB 28.5 billion, an increase of 44%. Revenue from international commerce retail business increased by 56% to RMB 23.3 billion. The increase in revenue was primarily due to solid revenue growth from AliExpress, especially Choice business and Trendyol. Revenue from our international commerce wholesale business increased by 8% to RMB 5.3 billion. The increase was primarily due to an increase in revenue generated by cross-border related value-added services from Alibaba.com. AIDC's adjusted EBITDA was a loss of RMB 3.1 billion. Losses increased primarily because of the increase in investment in AliExpress's Choice, Trendyol's international business, partly offset by improvement in monetization across all major platforms. Overall, we have seen a very rapid order and revenue growth of our AIDC cross-border e-commerce business over the last few quarters. To sustain this momentum and provide differentiated services to customers, we increased the investment during this quarter and will step up investments to drive further growth. Total revenue from Cainiao grew 24% to RMB 28.5 billion, primarily contributed by the increase in revenue from cross-border fulfillment solutions. Cainiao adjusted EBITDA was RMB 961 million, compared to a loss of RMB 12 million in the same quarter last year. The increase reflected economies of scale that leads to cost optimization, as well as optimized operating expenditure spending. In the coming quarters, as a strategic partner of AliExpress, we will increase investments in expanding our cross-border logistics capabilities to support AE Choice's growth. Local services group revenue in December quarter grew 13% to RMB 15.2 billion, driven by healthy growth of Ele.me and the rapid growth of AMAP. Local service group adjusted EBITDA was a loss of RMB 2.1 billion this quarter, compared to a loss of RMB 2.9 billion same quarter last year, primarily due to the continued narrowing of loss from our to-home business, driven by Ele.me's improved unit economics and increasing scale. Revenue from our DME group was RMB 5 billion, an increase of 18%, primarily driven by the strong revenue growth of offline entertainment businesses. Adjusted EBITDA was a loss of RMB 517 million, compared to a loss of RMB 391 million same quarter last year. Losses increased primarily due to the increased losses of Youku. Revenue from all other segments decreased 7% to RMB 47 billion, mainly due to the decrease in revenue from Sun-Art. Adjusted EBITDA from all other segments was a loss of RMB 3.2 billion, compared to a loss of RMB 1.7 billion in the same quarter last year, primarily due to increase in year-over-year loss from Sun-Art due to scale down of certain of businesses. Excluding Sun-Art, Freshippo, and in-time businesses that have physical retail operations, group revenue would have grown at approximately 8%, and our group consolidated adjusted EBITDA margin would have been 4 percentage points higher at approximately 24% this quarter. Lastly, we remain committed to returning cash to shareholders. We have been consistently buying back shares. In the 12 months ended December 31st, 2023, we have repurchased $9.5 billion in shares and have reduced the share count by 3.3% after accounting for shares issued under our ESOP. Additionally, quarter to date, until February 6th, we have repurchased another $1.4 billion worth of our shares. Our board of directors has approved the upsize of the share repurchase program by another $25 billion through March 2027. Upsizing our share repurchase program demonstrates our strong confidence in our business fundamentals and the cash flow generation capability. Following the upsize, we currently have $35.3 billion available in our share repurchase program. The upsized program will allow us to achieve a net reduction in share count and achieve EPS and cash flow per share accretion. Subject to market conditions, we target to achieve at least 3% in annual reduction in total shares outstanding for the next 3 fiscal years. Thank you. That's the end of our prepared remarks.